All business transactions can be stated in terms of change in the elements of accounting equation. How business transactions affect the accounting equation can be illustrated by using some typical transactions. As a basis for illustration, a business organized by Chris Clark is used. Assume that on November 1, Chris Clark begins a business that will be known as Net Solutions. The first phase of Chris' business plan is to operate Net Solutions as a service business, assisting individuals and small businesses in developing web pages and installing computer software. Transaction A. November 1. Chris Clark deposited $25,000 in a bank account in the name of Net Solutions. This transaction increases the asset cash on the left side of the equation by $25,000. To balance the equation, the owner's equity on the right side of the equation increases by the same amount. The equity of the owner is identified using the owner's name and capital, such as Chris Clark Capital. Transaction B. November 5. Net Solutions paid $20,000 for the purchase of land as a future building site. The purchase of the land reduces the amount of cash, but it doesn't change the total assets. The new amounts are called balances. Transaction C. November 10. Company purchased supplies for $1,350 and agreed to pay the supplier in the near future. You have probably used a credit card to buy clothing or other merchandise. In this type of transaction, you received clothing for a promise to pay your credit card bill in the future. That is, you received an asset and incurred the liability to pay a future bill. Net Solutions entered into a similar transaction by purchasing supplies for $1,350 and agreeing to pay the supplier in the near future. This type of transaction is called a purchase on account and is often described as follows: purchase supplies on account, $1,350. The liability created by a purchase on account is called an account payable. Items such as supplies that will be used in the business in the future are called prepaid expenses, which are assets. Thus, the effect of this transaction is to increase assets, supplies, and liabilities, account payables, by $1,350. Transaction D. November 18, Net Solutions received a cash of $7,500 for providing services to customers. During its first months of operations, Net Solutions received cash of $7,500 for providing services to customers. The receipt of cash increased Net Solutions' assets and also increased Chris Clark's equity in the business. The effect of this transaction is to increase cash by $7,500. The revenues of $7,500 are recorded in a fees earned column to the right of Chris Clark Capital.